Everyone, welcome to the VIP weekly meetup. Got a nice little presentation for everyone today, a macro review and a deep dive into Dario earnings. But first, StoryTrading is not an investment advisor, and investing in securities involves significant risk of loss. This presentation is being recorded. It's going to be provided to our VIP member community throughout the week, and it'll be going up on social media in about 1 week's time. So for tonight, we'll do a macro update, talk about the possibility of a bear market rally. We already saw 1 day up Friday, so we'll talk about where that can possibly go. I'm going to review the purchase I made in ARK. Those of you who've been paying attention, I said, hey, when ARK goes to $35, I'm going to step in, and I did. But I didn't have the guts to do it at 35. I waited for confirmation, went up to like 38, and then I got it. So we'll talk about that. Wheat, USO, fertilizer stocks, and a little bit on the new FAANGs. I think given some geopolitical updates, important to touch on those again. And I'll get into DRIO, not only a look at the 4 pillars, but is this an inflection point? So got a nice little thesis for you there. So regarding bear market rally moves, hey, I removed all my hedges the day prior to CPI. And I got into ARK leaps. I've been saying when it gets to 35, I may get into that. So why did I do that when it didn't really, the charts didn't hit my targets? I've been talking about a long time the 200-week moving average as my target for the QQQ, which is around 276. So around 285, 286, I decided to step in. So as we go through, we'll look at the charts. Remember, it's story trading. I look at 4 pillars. I'm not a pure technical trader. I'm also looking at sentiment, catalysts, and fundamentals. And I think there was a combination of some of these other factors that caused me to say, you know what, I think this is a good time to step in. And that's what I did. Removed all my hedges, and I'm long right now. So, hey, this is a good time to kind of remind you that the biggest moves historically come in the middle of bear markets. And if you look at the big .com bust, which is what I really am comparing what's going on here right now. Maybe we'll call it the great COVID bust. I don't know what we're going to call this one day, but I think it's going to be very similar when all is said and done. And you can see the most significant moves historically in the NASDAQ. How many of these in 2000 to 2001? Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 2002, 9, 10. 11 of 12 of the top 20 moves. And look at these percentage moves, 7 to 14% in 1 day. Now, we've only had one significant bear market rally. Now, these are daily percent moves. So it's actually, there's other data. Maybe I should pull those out in terms of bear market rallies over a period of days or weeks, throughout the .com bust. And so far, there were about 7 total in the .com bust, where you had significant moves of like 20 to 40%. This time we only had 1 so far. So even though I'm very, very bearish long-term and on the macro, to me, if you can trade around the core and time some of these bear market rallies, it's worth it. We've only had 1. I think we're going to get more. All right, so that's context of why I'm looking at things that way. So here's the QQQ, and you can see why I like that 200-week moving average. Support here. I didn't exactly touch it here or there, and I keep that in mind, right? Doesn't necessarily have to exactly touch it. And here we are again, now finally coming into view, this 200-week moving average. And remember, I look at this as a long-term bull channel. If we come and bounce off of that, that's not really a bear market. I know quantitatively it is based on the definition of bear markets. But if you think about how big this move was, I just view this as a correction, right? So if we get to that 200-week moving average and bounce off it, that's no big deal. That's not a recession. That's just a technical correction, the way I look at it. So it's almost bound to happen. Why wouldn't you get a technical recession when you have all these macroeconomic factors happening? And beyond that, maybe we do get a recession, and ultimately maybe we do even break this 200-week moving average and go down, but certainly you'd expect to find strong support at that 200-week moving average. But as I said, I stepped in a little bit early. Why did I do that? So here's why I did that is because going back up to here, you can see the RSI. Look at the RSI right here, here, And here, it touched it right there. It's, I guess, around 25 or so. Every time it got to that level, you had a big bounce, even that most recent bear market rally. And over here was the COVID lows. Over here was the 2008 low, 18 lows. And we hit that again. So I'm like, you know what? It didn't get to my 276, but man, that RSI is at a good level. Plus, we have the catalyst of CPI. And that's why I said the day before CPI came out, I removed all of my hedge. I went long ARK, even though ARK didn't hit 35 yet. It was like 38 at the time, or I forgot exactly where it was. And then after CPI, now the initial reaction was down because CPI missed expectations. However, CPI came in lower than last month, and it's been the first time since November, since October, when CPI really started sharply going up. It's the first time CPI went down, 8.5% last month to now 8.3% year over year this month. So that is like a qualitative change that could spark good sentiment in a bear market rally. So even though that first initial reaction was down, you can see it was a reversal candle there. It closed higher than it opened. That open red, you can see that. And then it continued the next day. And that bottom there, ARKK hit 35.10. All right. So that's close enough. When I say, hey, 35 is my entry for ARK for a trade, 35's close enough, right? This is not an exact science. So 35.10, I considered my target hit, but I was too much of a wussy to get in. I was like, I waited a couple more hours. And then when it got to like 38, I added more to my ARKK position, and that is working out well. I got like January leaps or January call options, something like that. So that's where I'm at. Man, Friday was super, super strong. So I did take some profits off the table on ARKK. Maybe about 30% of my position I sold, and I'm keeping the rest. And what am I waiting for? I think if we're going to have a bear market rally, the minimum target would be here at the 20 DMA, which is about it's about 318. I figure it drops a little bit over time. So, and you have some support here, which is 315. So this support can possibly meet that 20 DMA coming down, and you get resistance at 315. Now, can we get this, the first bear market rally we had, through the 20, through the 50, up to the 200, and a head fake over the 200, which got me and tricked me, and I ended up removing my hedges at the top because we went over the 200 DMA. So can we get something like that again? Anything's possible, but at the 20 DMA, I'm going to start taking risk off the table. I'll take more risk off the table at the 50 DMA if it happens. And listen, none of this may materialize, right? I am very, very bearish on the macro. We'll talk a little bit in a second about some geopolitical things that are happening that I think are not going to help. But it's possible because you get like the dot-com bust. You had 7 bear market rallies. So it's like, I don't even think it's possible. I think it's probable, you know, that we're going to have bear market rallies. Is it now? I don't know. We'll see. But so far, I timed the bottom pretty good, and I'm holding going into tomorrow. I think futures are up. So hopefully we'll get a move to 315. All right, at least. I thought, why 35 though, right? We tagged 35.10. That was just a technical call, really. I mean, not only technicals, but the COVID lows were about 35, right? You can see this white line I drew right here. Okay, that's about 34.47. I was also getting this low in 2000. Well, I don't know which recession. I don't know if that was a 2018 bear market we had, but right there again, ARKK 35, not exactly, but I like round numbers because I think traders look at round numbers, right? It's a psychological thing. Like, so if you're looking at a chart and you see like 34 or 36 or 39, I always go to the nearest like whole number, especially if it's like a multiple of 5 or 10. And it seems to work out for me. So that's why I said 35. Now I know, let's see if, there was another target that Vince put up. Let me see, is he on? He's probably just coming back from Vegas. I was supposed to meet him out in Vegas, but it didn't work. My flight got canceled. But Vince is looking at 31. He thought I put out 35. He put out 31. He may be right? Because I do expect we ultimately go lower, and maybe then we get to his 31 support. But for now, that's why I picked 35. I'm long, and I'm going to probably sell all of it, to be honest with you, or at least 75% of it if the QQQ hits the 20 DMA. Okay. So that's the QQQ and ARK. and the possibility of a bear market rally. But I want to talk about the FAANGs for a second. We haven't talked about that. That's the new FAANGs, which is fuels, agriculture, aerospace, nuclear, gold, and minerals, right? There's some alarming things that's happened, I believe, in the last few days, combined with some great technicals, which I think warrant us looking at this closely again. Well, Russia has cut off electricity to Finland. I think something to do with their demand to pay in rubles. I don't know the details of that. I see Finland seeking NATO membership. Maybe those two things are related. I saw something, I think this morning or yesterday, that now Sweden is seeking NATO membership. So all very bad things, I think, in regards to the continuation of that war and supply chain issues when it comes to energy and agriculture. And then we have India banning wheat exports. So this is not fun, guys. And this is all exogenous items that can cause stagflation, things that are outside of the Fed's control, right? Things which is going to make it very hard for there to be a soft landing, which is why longer term I'm bear. And if you look technically at the wheat and energy charts, they are very strong. I think I put up a couple. So while new FAANGs, and we'll talk a little bit about the other three, aerospace, nuclear, golds, but really I think it's the fuels and agriculture which are very strong here. Right now because of the geopolitical stuff. And here you can see wheat. I mean, you don't have to say anymore. Just look at that chart, right? So, yep. Okay, we'll talk about maybe how to play that, but that does not look fun. Does not look fun for us, for macro. All right. USO also has been very strong. What is that? Like a triple top here, triple, quadruple top. But it's still pretty strong. XLE very strong. Is this on a verge of a breakout with what's going on geopolitically? Maybe. So some ways to play it as a hedge. So when we hit that 20 DMA, or maybe even tomorrow, I don't know, I may start putting some of these back on. I got completely out of almost all these names. I kept nuclear. I kept basically most of my nuclear plays. But agriculture, DBA is a good one to look into. I think it's like an ETF, like an agriculture ETF. It has corn, soybean, wheat, things like that. TWI is an ag stock. They sell like agriculture, farm equipment, and they had killer earnings, and the stock is like exploding. Archer Daniels, another one to look at. ANDE is one that Matt told us about, Matt S, which might be a good opportunity because they're right in the sweet spot, in a great place in terms of wheat, but they had a bad earnings report because of some hedging activities they did, which didn't work out for them, some trades or something. So that was maybe a one-time item. You may want to look at ANDE, and of course you got the ETFs to talk about wheat, corn, soybean. But I'm going to show you a chart in a second of IPI because I think fertilizers might be a great place because you see like wheat's at the top of the chart, hard to buy, corn near the top of the chart, hard to buy, soybean the same thing. But the fertilizer stocks have pulled back significantly with low RSIs. Those may be a good entry because as wheat goes up, these ancillary plays may go up. I may be looking at adding some Moss and IPI tomorrow. And of course, you got the energy names, XLE, OXY because of Warren Buffett, big focus on that. Chevron, BTU, another one to look at. Call, aerospace, the top ones I recommend. Lockheed Martin, Raytheon, nuclear, CCG, DNN. Gold is not looking so great because the Fed is being super hawkish on interest rates. So I didn't put up a chart tonight, but I've basically gotten completely out of gold once I saw how hawkish the Fed is being on interest rates. So TGB in mine you can look at for minerals, MP for rare earths, LAC for lithium. These are like the top picks I have in the FAANGs, right? And I consider these hedges because I hate shorting the market. Shorting to me is scary. I don't know. And it's like, you want to bet against the US economy. It's like, it's very difficult, right? And you have like, who knows, maybe these industries become so big, it takes a SPY up with it, even though the rest of the market sucks. So I don't really love shorting as a hedge. So I look at these names as possible hedges. Okay. Anyway, look at IPI. This is the 20-week MA, and it hung on, man. Intra-week, it went below the 20-week MA. MA hung on over there. If you look at the daily, I didn't show the daily, but the RSI is like really low on IPI. They're printing money hand over fist right now. So is MOS, Moss. So these are some good ones to look into. And to get the latest, make sure to follow us on YouTube, follow us on Twitter at StoryTrading. If you go to our website, www.storytrading.com, you can also find a link to our Spotify channel to get all of our videos on audio only in case that's easier for you. And thanks. We'll see you next week.